All right, hello, everybody. We are back with the Bitcoin Treasuries Takeover. This is episode 15. Thanks for locking in here with us over on YouTube, on X. We've got Parker White from Apex, Chase Palmieri from Sovana, Yves-André Graf from the One Chair Pod. I'm Tyler Rowe from BitcoinTreasuries.net. Let's get into it, boys. Another big week. This one bigger than the last time we talked. Since last Monday, strategy's up 30, 35, 40%. Strive is up 74% last I checked. SATA has been hitting the Bitcoin printer, punching the ATM for the last 4 days. I expect them to break a record this week on their Bitcoin purchase outside of their initial purchase back last September. Bitcoin's price, it touched 80K. We're trading a little bit below that now, but I'm feeling bullish, guys, and I don't know if I'm ready to call the bear market over, or at least the bull market on full force, but this sure feels nice. This has been a crazy week. Eve, I'll throw it over to you first. Maybe you can give us the rundown for anyone who's been, had their head buried in the sand, what strategy did this week, the new announcement with their USD cash, and all the shenanigans happening with strategy.
All right, yeah. Maybe I can start with Strive. I have the numbers right in front of me, if that's
Great.
fine.
Hit it.
And then I can do strategy, or I can throw it off to Chase. I know Chase is prepared on strategy, our MSTR Maxi here. All right, so we had Strive by 1,110 Bitcoin, right? They purchased it partially with SATA. I think they had I think they sold 440,000 shares of SATA, and then the rest was ASST stock. So an amazing execution from the Strive team, as per usual. I think they've been stellar up until now. We talked quite a bit on the one chair with Quentin about Strive, because their execution actually throughout the whole bear market has been, in our opinion, exemplar, and they've done that throughout the bear market. Right now, we're seeing the innings, or the early innings of a bull market, and there that's going to be super interesting to see how they continue executing. And yeah, maybe I can already throw it over to Chase to maybe also touch on strategy and the numbers.
Yeah, so Strategy increased their USD reserve to 5.1 billion, which makes up for about 4 years of dividend obligation. And they repurchased 136 million worth of STRC. And their tweet here to celebrate this moment in time is that Strategy now holds 4% of the total Bitcoin supply that will ever exist, with 0% net leverage. This 0% net leverage is something that we've been calling out here. Also worth calling out that I personally have been calling for a minimum 4 years of dividend obligation, and we've seen them ramping that up since they're selling off of the USD reserve a few months ago, little by little, getting all the way up to 4 years. What I think is really noteworthy here, besides the fact that their stock MSTR was trading with 3x the normal volume during this big rise in Bitcoin price, is that they went and created another USD reserve, this time called a USD cash reserve, which itself has $1.59 billion worth in it. And that is not the same as the USD reserve of 5.1 billion. So they have a total of, almost 7 billion in cash. This cash reserve is not being earmarked exclusively for debt service or dividend obligations. So a lot more flexibility and optionality in this cash reserve.
Yeah, really big moves. So basically with their cash position now offsetting, um, those converts. Um, I guess, how do you expect the market to react to that long term, Chase?
Well, you would expect the creditworthiness of their credit instruments to be seen as more creditworthy and therefore trading at lower effective yields. And we are seeing some of that. So STRC is all the way at $97.24 right now. Yes, we are not back to $100 par yet, but we are very, very far from the digital credit panic or scare that we were at a month and a half ago, where we were trading, I think, in the mid 70s with STRC. And people that were betting on the creditworthiness of these instruments were buying STRD and others as much as they could, as fast as they could. So if you were an STRC holder who got hit by that drop in your principal, and you held and you didn't panic sell and listen to a lot of the people on Twitter running around saying that this thing was going to zero, then you would be basically all the way back in principal, and you would have collected a dividend in the meantime. So I think it's a really nice case study for what can happen to STRC and strategies, credit instruments during a very volatile bear market. And strategy really threw everything at us during this bear market, and still here we are, a couple dollars away from par.
Yeah, I think it's got to be really reassuring for investors or potential investors, maybe institutions looking at strategies pref stacking this cash, because it really does insulate them. It really does demonstrate, we all knew they could raise this type of cash if they needed to, but they really put the pedal to the metal here. Bitcoin's price pumping has certainly helped, and I'm sure both Strive and Strategy are going to announce that they raised quite a bit of money in this past week, and I expect Strategy to move up the Bitcoin Treasuries leaderboard and pass bullish this upcoming week. I think Strategy, it's unclear what they might do, but you've got to imagine they're going to buy some Bitcoin, because they're definitely hitting the ATM on MSTR this week. STRC is almost back to par. Maybe they stack a little more cash, but what are your thoughts, Parker, on the moves, the extra cash that Strategy has added to the balance sheet? I think the optionality is something that's really great that Saylor and Fong and the team have learned. We're going to have this segmented bit of cash that we can use for buybacks of the common, buybacks of STRC as needed, maybe to retire some converts, or to opportunistically buy Bitcoin if the price dips. What do you make of this new segment of cash, Parker, and what's it mean for STRC moving forward?
Yeah. I wanted to respond actually to something Chase said earlier about, the panicins on STRC. Something that my wife likes to use is, I'm sorry for the nervous breakdown. I had no idea it'd be completely fine. And so, that's kind of what you get with Stretch. And Saylor has been vocal about, yeah, sure, he calls it a money market, but he's like, hey, this is the place to park your cash for 6 to 12 months. Well, if you bought Stretch 6 months ago, you'd still be up. You just have to hold it a little bit, like not even that long. So, great reminder. But in terms of the cash, yeah, I think it gives them optionality. I think it creates um, a persistent dip buyer here, and dip could be in Bitcoin or in some of the other securities. I think what they're doing, the fact that they highlighted the net debt, I think is very important, because they've basically said, hey, we want to wipe away the converts. And so they started to do that by buying back converts. But what I think they realized is the market likes to see the cash there. No sense in paying back the converts early. And so I think what they're going to do now is just accumulate enough cash to cover the debt without actually buying it back, because probably a bunch of it will end up converting out. And then that cash all of a sudden becomes available to either buy back the shares that get basically sold into the market, or buy a bunch of Bitcoin. Um, so I think this is a big line in the sand for them, and I think they've crossed it. And so you might see some big Bitcoin buys this coming week. They're still certainly running the common ATM hard. Um, so I think the next target here is to get Stretch back to par. I think they're gonna, I think they're gonna get it back. I'd like to think this week, maybe next week. Um, But Saylor has talked about in the past, post IPO, it took 70 days to get to par from 90. And so 70 days from the most recent drop is September 8th. So I think September 8th is kind of like the drop dead date where they can just buy it all back if they wanted. So they're kind of deliberately giving people the opportunity to buy at a discount and, them not have to buy it all back. But I think they basically set a straight line and it's like between here and September 8th, like we're going to just bid it back. Um, and so I think that then leaves Bitcoin, and I think they probably need, let's call it 150 million, maybe 200 for buybacks. I know they've been doing like 130, 140 over the last couple weeks, so that's what they need for the buybacks. Beyond that, I think they're going to start buying Bitcoin again, and that is hugely bullish. I'm excited for them to do that. Wish they would have bought some at 58, 60, but I think they'll more than make up for any lost opportunity with big size as the upswing continues.
Yeah, I'll jump in there. I agree with you, Parker. I think now that we've crossed that line in the sand with the zero net leverage, zero net debt, that the next liquidity that they use to deploy should go against Bitcoin. The only nuance to that is that we still aren't yet at STRC par, so perhaps they're just going to flood the USD reserve for another couple weeks. But as soon as STRC hits par again, I believe that they have enough USD reserve on balance sheet with these two USD reserves for the foreseeable future, and that all excess proceeds are going to Bitcoin, and that, yes, to the market, once they see that Strategy is back in the market, not as a net seller, as they have been over the last couple of months, but a net buyer, that should help price run away even more, which will only further help STRC and SATA, which will further help Strive and Strategy buy more Bitcoin, and you get the reflexive network effect loop that we've seen working in reverse during this bear market starting to work in the positive direction.
Yeah, I completely agree.
Yeah, I mean the volume here on MSCR Common has been kind of through the roof, multi-billion dollars of trading volume. The last 5 trading days, I guess now, they were a top 10 traded stock at some points yesterday in U.S. equity markets. How do you think, broadly speaking, thinking strategically, is this the time they should always be hammering the ATM when liquidity is super high on their common equity? And do you have any thoughts on how the team might manage that or think about how hard to hit the ATM? Oh, it's not
Yeah,
directed at anyone's. Yeah.
So, obviously also co-founder of DFDV, a DAT as well. So, I'll maybe put my DFDV hat on here. The one of the challenges is, obviously the common stock is very reflexive, and it's, effectively a meme stock, right? Like that's how these things work. People get excited, they pile in, they pay a little bit more than the underlying because of the leverage, because of the flywheel starting, anticipating that flywheel, all of that. And so price is ultimately the best marketing tool that any financial instrument has, right? Number go up technology, as Pierre would say. And so if Strategy did not run the ATM at all, I assume they would be performing similarly to how Strive is performing. And you might say, well, that might bring more buyers in because the stock's performing well. It's ranking very highly on the top gainers list on all the random brokerage accounts and screeners. There's just a lot of great things about price going up to attract attention. On the other hand, they're not raising cash to do buybacks on Stretch, to buy Bitcoin, whatever. And so there's kind of a bit of a balancing act here. And, once they start announcing Bitcoin buys, you might see people getting excited and bidding the common. So maybe that kind of creates the flywheel as well and does what price might otherwise do. So there's certainly a balancing act here, and you kind of want to play around with it. And so, I could see them, once they start buying Bitcoin, maybe easing off a little bit of the common ATM and letting it kind of catch up to ASST, and start to expand that NAV multiple sum, especially when they can start to lean on the stretch ATM more. But yeah, I think I would assume they're going to let up a little bit after they've got stretched back to par and got all the cash that they want, because letting the price move is also an important part of the marketing strategy.
Yeah. Yeah, it's been pretty wild to see and compare it to the volumes on ASST, Strive's common equity. Um, Basically, I've just scanning back here, it looks like they're at just record volumes. They've never had this type of volume, outside of maybe, back in the close to the merger days with the SPAC. But yeah, these numbers they've been printing are pretty phenomenal. Um, each of the last two trading days before today, 15 million shares traded. For a company of their size, I think is really interesting to see. And yeah, I think Strive's just going to announce a huge Bitcoin buy here. Their previous record this year is 2,500 Bitcoin. Other than the Semler transaction, which was 5,000 Bitcoin, and then the initial pipe financing with the SPAC, which was another 5,000 Bitcoin. I think, if this week and the trend that has started the week here continues, Strive's going to probably buy 3,000 plus Bitcoin by my estimation. You've got SATA, which is looking like it's funding a few hundred Bitcoin a day. If that continues, that helps. The common is crazy. It's how it's ripping. I haven't delved too deeply into it, but I've been looking at the options market on ASST, and it's certainly, I think that's fueling a little bit of this leg up as well. There's some interest there. It looks like some of the leaps are getting bid on. So yeah, I think the ASST common shareholders who bought the dip are pretty excited. They're pretty excited to see how the flywheel is re-engaged here. And yeah, I think the takeaway is that Strive has built a really compelling product here with SATA, um, with their clean balance sheet, that's allowing them to outperform, even strategy, which has kind of been the goal of Strive and Matt Cole. Their CEO said that we want to be, the fastest horse in the race. So, um, what's what's your read on this? Maybe I'll throw it over to you, Eve. Um, how with price moving up, it's easy for SATA to get back to par and turn on that Bitcoin accumulation engine. Um, if price chops around here up, in the upper 70s, lower 80s for a little while, do you think SATA can consistently print this type of volume, or is this kind of a function of Bitcoin ripping upwards?
That's a great question. I believe that looking at how SATA has performed in the past, that it would still remain at par, probably not all the time as we see it right now, but I think it could hit par quite a few times depending on how Bitcoin chops from here on out. But due to the size, right, and probably that's also one of the reasons why STRC has been lagging, right? It's also it's more liquid. It's like much bigger than SATA as of today. So anything that when you have those drawdowns like we saw 1.5 months ago, then obviously it takes more time for a bigger product to go back to par. So I think the price action that we've seen so far between STRC and SATA, at least in my opinion, kind of makes sense overall, just from this perspective. And with SATA, obviously, it's still it's hard to believe, but actually SATA was only issued, I believe, in November, so it's not even been a full year that we've seen SATA out. And the fact that it's already grown that big and that it's trading the way it is, I think it's quite amazing to see. And one maybe additional thing, right? I think that also when people look at this product, there's going to be, or more exactly, the Bitcoin price action that we've had. I think this already caught a lot of eyes, right? We've had a lot of liquidity that was we've talked about this many times over, right? The AI trade was taking all the air out of the room, And now with Bitcoin ripping 22%, I think, first of all, now this is not going away, right? Every eyeball is looking at Bitcoin. All the participants will be looking at Bitcoin, but also when you have a company like Strive or ASST, the common that's ripping, we saw it last week, 50%, I think, in over the week. That's also catching additional eyeballs. And all of that is not just for ASST. They'll say, what is the product behind it, right? There's also SATA and so on. So there's going to be a lot of attention on Strive, I think. I feel like obviously we're in a bubble, right, when we were on X and all of us talking about it all the time. But you go outside and people sometimes talk about strategy, but nobody's talking about Strive. So there's still a lot before Strive really reaches its full potential. At least that's how I see it. And I mean strategy as well, right? Again, but just to say, I think SATA is going to be hitting par over the coming months if we keep the price action in, or even if we consolidate.
Yeah, I've been looking at the volumes on SATA, and they're relatively they're not as high as the massive volumes that we saw when they went to the daily dividend. So I think there was a lot of excitement, and as we found out later, some major short interest that was opened on SATA around that daily dividend date when it was still hitting par before the drawdown. But they are doing 10, 20, 30, 40, 50 million dollars in volume this past week, 30, 40, 50, several of these days. It is still low, relative to the total outstanding. I think it's 820, 830 million in notional value. You guys can correct me if I'm off there, but I think that's in the ballpark of the size of SATA. And but this is pretty comparable volume compared to April, compared to May, when we saw them raise a bit of money at par on SATA. That kind of broke X for a few days. STRC was also doing its thing at that time. So, yeah, I do wonder if this instrument really shines as more volume is going to, I think it's just bound to come in as more people find out about this product, as there's institutional sizing. I think getting over the $1 billion hurdle is something that is like a bit of a just psychological point to break through. I still think on a rate basis, though, the volume is still just lower than STRC, and that's what you're going to see with a smaller instrument. But curious to think what you guys have read about, what type of volume SATA's trading at. It looks like they were last week. They captured a higher percentage of the total volume than was typical. So we always try to project that over at BitcoinTreasuries.net and put a projection out, and we far underestimated them last week, and I expect while we're updating our models for that, we might underestimate things again this week. But yeah, curious of your read on the volume and how you think SATA and STRC both can unlock more volume as we enter possibly a Bitcoin bull market.
I'll jump in. One thing that could attract more volume is if we start to see rates lowered, right? So if we start to see rates in the rest of the market dropping, these yields become incrementally more attractive. One thing that I spent some time thinking about this past weekend was the endgame for Strive and strategy, which, if you believe that they're not going to get into M&A activity and that they really just, want to be digital credit issuers, if you believe what we're seeing with the Treasury and deficits and $40 trillion of U.S. debt, that we're going to have to see lower interest rates over time, approaching 0% interest rates to be able to basically monetize away the debt. In that end game, which I don't know when that's going to happen, that could be a decade or two out before we really start to see that level of manipulation with real interest rates. But in that scenario, you imagine a world where the Fed is lowering rates, liquidity is expanding as they monetize the debt, And Strive and Strategy are able to drop their yields down in tandem with that to something like maybe 6% is really attractive in that future environment, where Bitcoin is also expanding because of low interest rates, risk assets, and liquidity. Bitcoin is expanding now at 50% annual CAGRs. So that gap over the long term, when we really start to see governments in the US try to monetize the debt, that to me is the real end game here, where Strategy can maybe get away with issuing a 6.5% dividend, and it's still the most attractive credit product in the market. And because while they're lowering that yield and that dividend obligation, Bitcoin CAGR is expanding because of liquidity and M2 money supply, that gap that accrues to the common equity just explodes. And to me, that is definitely not being priced in when we look at like an MNAV of 1.1.
Yeah, I think the super like exciting endgame thing here is just as you said, Chase, like once the market widely recognizes this as not some niche financial product, but like a piece of, all major portfolios out there, um, the dynamic really starts to get interesting. Um, and I think what people don't often appreciate is, the majority of growth in any kind of new product or innovation occurs, um, once things are kind of firing on all cylinders. So you think of like, all the tech stuff back in, the dot-com bubble. Sure, there was some, a lot of stuff that was hot, but it wasn't really until say, 15 years later that Google started really hitting their stride, Amazon, these types of companies. Um, I mean, you can even look at the AI bubble, and some of these names like a Micron or a SanDisk have been around forever, and just their recent performance has really pushed them into a, top decile or top percentile performing stock. Um, and so I think you'll probably see a scenario where Stretch will continue to grow, but then maybe it's this bull market, maybe it's the next one, but I think probably this bull market, people start to really recognize it for what it is, and it really starts to take off. And we'll look back on the days of $10 billion issued as kind of cute and small. Um, so yeah, I'm very excited for us to get past the, maybe it's the 2-year mark, the 3-year mark, for the credit rating agencies to start to get involved, and for this to become this kind of systematically important company, um, and, be issuing hundreds of billions of dollars of credit instruments kind of across the stack.
Yeah, I think it's one of the narratives I think Punter Jeff on True North always talked about. This is MSTR is the biggest story of in all of finance, and I think he meant that when he said it, certainly. But it was like a little bit tongue in cheek because what strategy's doing is like a niche story, but it's under the surface, and I think you guys are kind of right. Like at some point, the lid's going to come off on this thing, and uh, yeah, it's going to look pretty wild when Bitcoin does its thing. Like you said, Parker, if rating agencies come in or some other sort of stamp of approval from, institutional monies. I think that there is some pretty high ceiling on what this thing can do, and Chase, your point holds that the common stockholders are going to be a big benefit to the fruits of what STRC can bring. Um,
Yeah, and I think the real flipping point here, or tipping point, is when people go from getting ridiculed from being an MSTR supporter and a strategy supporter to being ridiculed for being a doubter, right? And that's like where Bitcoin's at now. When someone comes on, CNBC or whatever, and is like, I don't know about these Bitcoins thing, like, whatever, like everyone's just like, all right, boomer, like get out of here. Um, it's just like common knowledge that like the Jamie Dimons of the world are like passe, and like they just don't get it. Like everyone gets Bitcoin now. Like if you don't get Bitcoin, you're a moron, and like you're rightfully ridiculed. We're obviously not there yet with strategy. It's still cachet to dunk on Saylor and strategy, but I think we'll get there. And that'll be kind of the lagging signal, the backward looking signal that we've arrived when you like see that interview and someone goes to make fun of strategy or Saylor and you're like, ooh, that felt kind of passe. And the other, like the commentators on the show kind of like, normie commentators kind of made fun of them a little bit or kind of were like, wait, why are you saying this? And you'll be like, oh yes, that's the moment we've arrived. And that'll be, once we've already clearly arrived, but that'll be that little mental like, yeah, we're there.
And if I had to guess, I would say that happened around the $1 trillion asset mark for Bitcoin, and I wouldn't be surprised if it's around the $1 trillion market cap mark for strategy.
That would be,
Oh,
yeah,
man.
that would be what, 20x roughly, something like that from here.
It's hard to believe the ceiling after after what went through in 2024, 2025. I guess from the 2022 and 3 bottom, like, those moves were absolutely wild. I remember, um, you know, uh, just like just like unable to go fall asleep sometimes, just thinking about how strategy was moving in the markets over this last cycle, and to imagine that we've got another 20x that for strategy bulls like us seems very plausible and likely to eventually happen is pretty wild. It's yeah, just what a
What
story.
Well, I guess an important thing there is I think it's Chase, you're going to highlight that it's a $1 trillion market cap. So in theory, the stock actually might not go up at all if they can just 20x the number of shares outstanding. So it'll be some mix. Maybe it's like, double the float and then they get a 10x or something. But, yeah, I
Yeah.
guess we'll have to see. Hopefully there's
Yeah, I
good
mean,
price performance in there.
for sure, for sure. I certainly expect some pretty good price performance regardless. Your point's taken, obviously, Parker. But what does that world look like? If strategies, whether it's a 500 billion, 1 trillion, $2 trillion company,
Well,
eventually, like, how do they? We speculated, we talked about this, but what does it mean to have a balance sheet that is just so robust and so massive, relative to Bitcoin, and the hardest money the hardest capital that is out there in markets. Like, how would you view a company maybe in a side by side that had just a robust commodity balance sheet of something else, whether it be like gold, silver, oil, something like that?
Well, I guess I would just interject that on the path to 1 trillion, I think that happens a lot faster than what we've seen in the ramp up of market cap to date. Because honestly, Bitcoin has not performed that well since the strategy. We've had a couple good years, we've had some flat years, we've even had a down year. And in this down year, in 2026, strategy still acquired on net something like 120,000 Bitcoin, right? So this is, in many ways, the worst it will ever be in terms of a year of accumulation. If you think about what happens if we have like 3 green years in a row and strategies trading volume is what it's been at for this last week, and during those, that's the new average over that 3 years, we could be looking at years where they acquire 500,000 coins per year. And that is insane. Like, they could be standing with 8 to 10% of the total Bitcoin supply just a couple of years from now. I don't think it's ridiculous. I think people forget that the reflexive loop actually means more Bitcoin in Bitcoin terms acquired during bull markets when price is running away. Like, they actually get more Bitcoin to the balance sheet as price is running up than they do when they actually ironically struggle to acquire as much Bitcoin in Bitcoin terms when Bitcoin price is at 58K, 60K. So that is the reflexive loop that we just still have never really seen. It's been promised. It's the promise of the amplified Bitcoin Treasury company, but we've never really seen it. We've seen moments in time where it's ticked on and it's headed that way, but we've really never seen a proper bull market with these vehicles in place. And then I guess, like, what does it mean when you have a company, let's just say they're trading at a 2M NAV to get to the 1 trillion market cap. So let's say they have $500 billion worth of Bitcoin on the balance sheet. That's still prices close to like 500K Bitcoin. But to me, that's not insane. At least 2 or 3 years out from now, that doesn't feel insane to me. I feel like we're already well below trend. I think the median target for the power law, if that's something you're into, is roughly 400K, I believe. So I think that we mean revert in Bitcoin terms here. I think we've seen the worst credit scare that Strategy and Strive will ever face, because now they have the benefit of having shown what happens when they come through a bear market, and that it's advantageous to just stick with them. So I don't expect a panic like we'll ever see again. And also, if you believe that Bitcoin's volatility is being lowered either by these products or just by the institutional players, probably the next bear market, this bear market we saw a 50% drop instead of an 80% drop. Maybe next time it's a 30% drop. And maybe a 30% drop doesn't scare STRC investors one little bit, especially because they can look back a couple years earlier and see that if they just held, they would have returned their principal in a matter of months. So I really think that this is like the worst it's ever going to look for Strategy and Strive, and that we still haven't actually seen what happens when, to Parker's point, it is firing on all cylinders.
Yeah. I was talking with Kotzman yesterday on his podcast, and he asked me, "What do you think about the word super cycle that's been bantered about?" And it's I said I wasn't there yet, but this certainly feels different. If we've bottomed, which it really feels like we have, I think that is a powerful meme that could be thrown about in circles that aren't paying as much attention to Bitcoin. And that the word super cycle in Bitcoin's price, like you said, if the next drawdown is dampened even more, Chase, and we only get 30% down or something like that, I think a word that's going to gain a lot of steam is the Bitcoin super cycle, and that's something that could draw even more eyeballs on there. There's nothing special. There's no like official definition, but I think narratives and the memes around the price and the asset are really powerful. I think Bitcoin flipping some of these larger market cap companies in the next bull run are something that people are just going to have to report on as in financial circles. And yeah, it's fun kind of forecasting, thinking about where this can go.
Yeah, maybe just to add on Chase's and your point, Tyler, I think it was Jack Mallers had a great post about it, right? Saying that there hasn't been a proper bull market actually since 2021, right? And if you start pricing it in gold terms, basically those bull runs that we've seen as of late are failed bull runs, right? So if we start seeing this mean reversion, as Chase points out, and now with institutional adoption and all the reflexivity that comes with all those Bitcoin treasuries, then yeah, obviously I was also thinking of this term super cycle came to mind when he was talking. So yeah, I think we're in for some really interesting times ahead, and especially now that we haven't talked about it, but basically the reason why we had Bitcoin rip is potentially because of this comments from Scott Besson, right? Coming in, they're saying that they're essentially going to do a sort of QA style and all of that. So looks like all these interventions are back on the menu, and that obviously means liquidity and all of that drives Bitcoin and prices up. So.
And it's too early for a victory lap here, because all of us are still down from all-time highs, and I don't know about you guys, but I'm sure you were telling people even in the 100K, 120K range that it's still early for Bitcoin get in, and there are probably still some friends and family that have listened to us and bought in and have entry prices that they're still down on. And so it's too early to victory lap, but I do think it's worth noting that this channel and this group and just the people who have been more supportive of Bitcoin treasury companies and these strategies in general, you either, if you bought in at previous all-time highs, you did one of three things during this bear market. You got scared out and you sold, in which case brutal. You probably took like a 50% or more haircut, 50% on just Bitcoin, probably 80% on some of the treasuries. You held on and you listened to this group, or you just didn't listen to anything and you just said, okay, it'll come back, in which case you're already, reapproaching, par, or at least your principal having returned to your initial investment amount. Or you listened to this group and you laughed at the people who were panicking and you doubled down and you actually picked up some Strive or picked up some strategy below $100. Or you did what I did and I was talking about on the show, and you picked up STRD with 20% effective fixed yields and already a 25% appreciation on the principal. It's like there was some incredible buying opportunities here. And if you were listening to the right voices, I would just take a pause and reflect on how those voices might have helped you make money or not lose more money, and who was panicking you during the bear market. And clearly just a few weeks later, especially if they were the STRC panickers, those people were wrong. Those people were always going to be wrong. They weren't looking at the math. They weren't really looking at the balance sheet of strategy. They didn't really understand how these vehicles work and how there's a natural, desire for STRC to return to par, and that strategy has the financial incentive to do everything they can to return STRC to par and to recoup your funds for you. So these were temporary losses. And I think it's important to look around at your X feed, and maybe you need to shuffle some people around, because there were voices that remained math driven and logical during this time and even found opportunities to make money. And then there were people who panicked and drove clickbait and tried to get you to sell at the absolute bare bottoms. And those people, you just don't need them in your lives, because Bitcoin is going up forever. And so companies that have more Bitcoin on their balance sheet than they do liabilities are also going up forever.
That's a
Not
clip.
wrong.
That is a clip. STRD, you heard it here. Chase was pounding the drum. He was the biggest STRD booster, I think, this summer. Yeah, it's up 20% on the month. Locking in a 20% effective yield. I mean, you had your opportunity, everybody, for life to lock in that 20% yield. Chase was screaming it from the mountaintops, and yeah, I mean, yeah, it is interesting to see how these other press have performed. Just the rebound has been, straight across the board. Everything's up. That's what all these things backed by Bitcoin do. When Bitcoin's price is rocketing, so does everything else. I mean, yeah, just looking at STRK, that's up 20% as well over the past month. Stride was up 25%. Haven't taken a look at Strife recently, but STRF looks like that was just up not as much, which is interesting. What's your read on that, guys? Looks like STRF is only up 3.5% over the past month, and it's the most senior of the instruments. I do wonder, does strategy hit the ATM on this thing if some volume returns there, or is Strife just an artifact of the past?
Yeah, I think you can't take too much from price on these things, because it's just different shareholder bases. I think that's exclusively why SATA's back at par and Stretch is not. Just different buyers and holders and sellers, and because we all looked at the math and watched the math, and it just made zero sense. Like, the fundamentals did not line up. These things were just all trading out of whack. And that's just because there's a bunch of, monkeys behind the screen that are, slamming buttons that can't do math and are trading on emotion. And so I think, in many ways, it's like the whichever security went down the most, all that's telling you is the one that has the most emotional traders behind it. Otherwise, these things would be trading differently. And so I think Stretch probably has, the most monkeys behind the tape, and, that's fine, but, just recognize that the animal spirits in either direction can move it, more than some of these others. So STRF not really trading, much down, much up. Like, I think it just tells you the shareholder base is maybe more math oriented.
Yeah. No, that makes sense. You know, it's interesting. I think like this scenario that happened with STRC can happen again if Bitcoin, you know, gets boring with price action at some point down the road. But I think looking forward, like STRC short people who come in to short STRC, those types of uh, shorts are just going to get fatigued more quickly. I think there's less smart money there that's going to be shorting stretch. And sure, will people make money off of it shorting it in the future? Yes, but you know, I think a short can opportunistically come in and short MSTR versus Bitcoin and make cash like Jim Chanos did. And you know, if they're really smart and opportunistic about the timing on that, you know, do it at your own peril. That's certainly not advice to someone, but I think you know, that's a trade that can sustain and can have legs more long term. Where the STRC, people coming in and shorting it, you know, the longer this product's out there in the market, the more strategy is stacking, you know, increasing the credit quality of the company, of the balance sheet by stacking cash, you know, by having, you know, zero net leverage outside of the prefs. I think that makes STRC just not look like an interesting short opportunity as the years go by. So will it delever? Will it
Yeah.
depeg, so to speak, again? Sure. But I think shorts on that thing are eventually going to really fatigue.
Yeah, I think that's absolutely right. Like, not only is the USD Reserve signaling to STRC investors that you're safe, you don't need to panic sell, but it signals to the short interest, hey, like, maybe you don't want to come try and short this because we have a massive USD Reserve and we're showing that we're willing to do STRC buybacks now. Like, go short something else. This game is over. We've got the cash now to, you know, end this game. You played around in our ecosystem and you got the best of us for a month and a half, but you know, we're never going to let that out of balance happen again. And I think that's why we're already seeing STRC ticking back to par.
Yep.
Yeah.
I think so. I do wonder. Strategy's got $1 billion, I believe, authorized to buy back the common MSTR. Does that move the needle given, you know, the massive volumes that we see on MSTR? Like, um, what's the scenario where they're buying back the common? You know, like if they didn't do it in this in this bear
Yeah,
market.
I just don't see them buying back common. I think, like you said, the time to do it would have been now or, you know, a couple months ago or something, but they never really traded a discount to whatever metrics they were floating. I mean, they always changed the metric a little bit to kind of boost it so they could, you know, keep going. But, um, you know, I think unfortunately they're so systematically important at this point that them selling a lot of Bitcoin could create some reflexivity. And it's not the doom loop, you know, down 25 or 50% or something, but you know, you could be pushing the price down 1 or 2% a day by selling, you know, $1 billion worth of Bitcoin to buy back common, and like that kind of compounds over time. Um, so I think ultimately they want to keep their Bitcoin, and so I think doing buybacks, you know, unless the common for some reason really trades at a discount, you know, don't think you're going to see it. And I also just don't think you're going to see the common trade at much of a discount ever again because like this was the chance. It just didn't happen.
Yeah, it's actually worth calling out. Like, the common never traded below the residual value after senior claims, even during this panic, even during this bear market. MNAV was always at 1 or above in CEBE or residual terms. And so, like, yeah, they have $1 billion that they could theoretically buy back MSTR with. When would they do that? Only theoretically if it's trading below residual, which if it didn't do it here, when they threw like, honestly, a lot of missteps at a bear market and crashing Bitcoin prices and crashing STRC prices, I just don't see it. I think, you know, now you have to ask yourself, okay, if we're not going to trade below the residual value of the Bitcoin on the balance sheet, then how much should the multiple be? And I think people start looking toward a forward multiple and less at, you know, a discount. And then I think that naturally is going to start to drive MNAVs.
Yep, agreed all around. Well, thanks everybody for strapping in here for almost an hour with us. We'll be back next week to break it all down. Like I said, I think we're gonna have some more news to talk about next week. We'll see you at noon Eastern on Tuesday. For Parker White of Apex, at the other Parker _ on X, at Graf Yves-André Graf from the One Chair Pod, at Chase Palmieri from Sovanas. Check out Sovana.io. I'm Tyler Rowe at Tyler Compiler on X. Thanks for strapping in. We'll see you next week. Look for another podcast dropping later this week, and we'll jump on the opening bell. Sit in with us at 9:30 to 10 a.m. Eastern.